Hello and welcome. You tune in to Market Fatafat with me, Ankita Saxena, and with me is Sneha Seth. And this is the show where we take you through all the stocks that are buzzing away in trade, either on the back of news flow or on the back of technicals. But first up, we'll take a look at how the markets are faring right now. As of now, well, we are well below this 25,000 mark. In fact, that was supposed to be a support level, but we have managed to breach that, and we are down from those levels. In fact, we are hovering around the day's lowest point right now, and all the sectors are in red, barring the financial sector right now.
Absolutely, Ankita, like you summed it up, 0.3% cut coming each on Nifty and Sensex, and Nifty below that 25,000 mark. Sensex, however, holding above that 81,500 mark, but nonetheless 0.3% lower. You have Nifty Bank also that's currently very flat, but with a slight negative bias. India VIX has gone up approximately 2%, and the advanced decline ratio looks fairly balanced as of now, but tilted towards the declines as of now. So that's a point of that's a worrisome point actually coming in for the markets right now. You have the likes of HDFC Life, Dr. Reddy's, HDFC Bank, Grasim, Hindalco, Airtel. All of these are doing well for the Nifty. However, what's weighing on the index right now is Trent, M&M, Hero Moto, Titan, Adani Ports and Nestle. Now, let's also talk about some sectors like Ankita spoke about. And other than the financial services sector, you have every other sector in the red right now. And the losers have been led by Nifty Auto, because Nifty Auto is currently down more than 1.5%. Media, pharma, IT, FMCG, metal, realty, all of these counters are deeply trading in the red today. So it's not looking very good for the markets right now. But well, yes, that's how we're trading right now. Let's just quickly take a look at what the broader markets are also up to right now. And they're also trading in the red. You have Nifty Midcap that's down 0.3%, small cap also down 0.3%. So that's what the market breadth is looking like right now.
Alright, then let's get started with all the stocks that are in focus today. Let's get on board Sneha Seth, who's a senior analyst on the technicals from Angel Wall, and also from our team, our research team, we are joined by Janay. Hi, thank you so much to the both of you for joining us today. Let's get started with all the stocks that are in focus today. First up is Cochin Shipyard that fell over 4% as the government's offer for sale, or OFS, which is likely to offload a 5% stake in the PSU company, opened today. Now, through this OFS, the government intends to power stake at a floor price of rupees 1,540 rupees per share, implying a discount of 7% from the previous closing levels. Now, the OFS includes a base offer of 2.5% stake or 66 lakh shares, as well as the green shoe option of another 2.5%. Now, the OFS, which opened today for non-retail investors, was subscribed 1.76% as of 10:30 a.m. As of the retail investors, the issue will open on the 17th of October. Now, the indicated price for the non-retail category will be released separately. Now, the government currently owns 72.86% stake in Cochin Shipyard as per the company's latest shareholding data. So on the back of this OFS stake sale coming in, Cochin Shipyard is down and out in trade, trading with cuts of 4.3% right now.
Alright, so Cochin Shipyard, one of the big losers on the street right now, but let's shift focus, talk about a stock that's doing pretty well for itself, especially given the choppy markets that we're seeing right now, and that's RailTel. This stock is up more than 8% as we speak, and at one point of the day, it was as high as 10%, and this is on the back of the company receiving a work order from the Maharashtra Housing and Area Development Authority, which is commonly known as MADA, for projects amounting to 79.8, roughly 80 odd crore rupees. The contract is for the selection of a service provider for the cloud hosting and managed services to set up, migrate and manage the data center and disaster recovery site for MADA on the cloud. The order is to be executed by the 15th of January 2025 and is solely based in India. So on the back of this 80 crore rupee order win coming in for RailTel, the stock is holding up pretty smartly, 8.3% higher in fact as we speak.
Alright, moving on then, Sneha, coming to you, Deepak Nitrite is what you have picked out for us. Now this counter has just started moving up. What is the upside that you're seeing from here on? I mean, it has been able to hold out into some decent gains in the last 6 months, but where do you see this stock going up?
Good afternoon, Ankita. If you look at the chart structure, recently we have seen this counter taking support near the 89 EMA on the daily chart. There was a falling trend and resistance around recent highs, that is yesterday's high, that was around 2,945 odd zone. So from there we have seen this counter showing an up move. I believe looking at the overall chart structure, this counter looks poised to at least move towards 3,050 odd levels. So I would, if someone wants to go ahead and long, I don't think at current level also it's a it should be thought of taking a fresh bet in this counter for a target of 3050, and the stop loss can be maintained at least around 2875.
Okay, so those are the levels that Sneha is spotting for Deepak Nitrite. But Jinay, coming to you for an earnings candidate whose numbers came yesterday post markets, and that's KEI Industries. Now the stock is leading away. Take us through the earnings fine print.
Well, definitely. So, if you look at the earnings, the overall set revenues grew by 17%, coming in at 2,280 crores. A year-on-year basis, growing 17%, whereas the net profit grew about 10%, coming in at 155 crores versus 140 crores. But the pressure was remained at margin, pegging a question that is the company growing at the cost of profitability? Because if you look at the margins, it came up at 9.7% versus 10.4% on a year-on-year basis. Now, the company has also announced that it will be raising 2,000 crores funds by the issuance of other eligible securities or by the way of QIP. Well, the management was earlier at 80 now, where they said that they will be using this 2,000 crores for the capex of a greenfield project. Also, they're maintaining their FY25 guidance with 18%.
Alright, moving on then, the 6th edition of Global Sustainability Alliance, the SDG Summit, is currently underway in the national capital. Let's go across and listen into the word coming in from Montek Singh Ahluwalia, who's the Indian economist and a civil servant, former Deputy Chairman, Planning Commission of India. Let's go across and take a look at what he had to say about it.
But this needs to change.
Definitely. I think action for both the public as well as the private sector here. Maybe I'll just step back, Mr. Ahluwalia. Dr. Ahluwalia, you have been an economist all your life. I think, we look at core GDP growth as a metric of a nation, developing and growing rich. With, the focus on climate and sustainability, when you think of, our GDP model, how does that capture it for a transitioning economy? There is a cost of, air pollution or water pollution that happens as we grow in our classical, growth models that we have seen in the Western world, and replicating that in India for a transitioning economy. Is there some other way that we should look at economic growth or growth per se when we think of, focus on climate and sustainability?
Well, first of all, by the way, I don't think people just talk about GDP. For years, people have been saying GDP is necessary, but it's not enough. So let me say quite categorically that at $2,700 per capita, anybody who says you don't have to grow, you should think of other non-GDP ways of improving your welfare. There are ways of improving your welfare, but at $2,700 per capita, you remain a joke internationally. So, either make up your mind. If you want to be taken seriously, we should, look, China has a per capita GDP of something of the order of $13,000 per capita. So it's quite reasonable for us to say that, look, GDP has to grow. But it's not enough. Merely GDP growing and not doing enough on health, or not doing enough on education, or allowing biodiversity to disappear, allowing water to be polluted, that's a disaster. But I think that's well known. And also the remedies are well known. The trouble is they're extremely difficult and therefore nobody wants to take them.
Understand. Maybe a separate question on the focus on urbanization. I think, again, the classical growth model has always been that, cities have been the centers of economic growth. And again, when we look at climate and sustainability as a metric, and we see cities in India, we have issues of congestion, we have issues of, environmental stress in cities. Is there a need to rethink how should we grow as India over the next 20, 30, 40 years? Is there a super distributed model that we should look at? What will be the right incentives or the drivers for that as we think of our growth in an environmentally sustainable way?
No, I think you make a very, very important point, because there's been a tendency in India to think of urbanization in terms of the expansion of metros. That's a disaster. We do not need another group of cities with something of the order of 20 million people in them, which is more than the population of almost 100 and something of the United Nations countries. But urbanization we certainly need. What we need is a much greater expansion of cities which are currently called the second and third tier cities, because they are large enough to provide, if you like, urban facilities and amenities which we need in order to have industrialization, but everybody doesn't have.
Alright, that's the word coming in from Montek Singh Ahluwalia from the Global Sustainability Alliance SDG Summit. On that note, viewers, we'll slip into a very short break on this edition of Market Fatafat. On the other side of the break, we'll talk about some big buzzers in today's trade, so you stay tuned.
Welcome back. You're tuned into Market Fatafat, where we're taking you through all the stocks that are in focus today on the back of news flow and on the back of technicals. Sneha, I'll come to you. You've picked out UBL for us. United Breweries is the name. On the charts, well, it has been in a consolidation mode over the last few weeks. In fact, last 1 month it has been consolidating. Tell us, do you see a breakout now?
Looking at the overall chart structure, I believe, especially this week, wherein it is down by nearly 3.5%, I believe there is some more selling pressure which you can see going ahead, and we can see this counter at least heading towards 1920, 1930 zone. So if I would say someone who's stuck in a long should think of exiting their long positions, and someone who's having a positional or short-term trades, in that case one should keep a strict stop loss of around 1920 and hold this counter.
All right, moving on then to the other counter that is in focus today, and that is Bajaj Housing Finance. And why this counter is in focus today? Because Ambit has initiated a sell, and the target price is 86 rupees, which is a 39% downside to the stock. But the valuation implies the ask rate of around 2x of the industry growth. The prime home loan is a mature industry which is rather dominated by the banks. That is what Ambit Capital is saying. In fact, competitive industry dynamics is likely to weigh on the loan growth and the ROE for Bajaj Housing Finance. Now, the non-housing loans maybe maybe the growth and the ROE accretive, but they entail higher risk which can manifest during the real estate downturns coming in soon. But the current valuations of 5.2x FY26 estimate book value is at 104% premium to its peers, so it's rather expensive for now. But it builds in 24% and 23% AUM, EPS CAGR respectively, and 16% average ROE over FY24 to 34. This implies a replicating parent Bajaj Finance's success, but the prime home loan is a moderate growth industry, and high competition from banks is something that could weigh down on this particular counter. And on the back of that, Ambit has initiated a sell on Bajaj Housing Finance.
Absolutely a sell rating coming in, but the stock is in fact reacting the other way, 0.8% higher. But let's move on and talk about another stock that's in focus today, and that is Ashoka Buildcon. And this stock is in focus on the back of an order win. They've received a letter of acceptance, which is an LOA for projects totaling to 1,126 crore rupees from the Brihan Mumbai Municipal Corporation, which is the BMC. The project includes construction of flyover Arm 1 and Arm 2 at the T junction on the Sion Panvel Highway in the Maharashtra Nagar in the M&E ward. And they've accepted the bid price for the project is at 1,126.6 crore rupees, like I mentioned, and it will be executed within the time frame of 30 months. So significant order win coming in Ashoka Buildcon's way, and on the back of that, the stock is doing up pretty well, up 2.2% as we speak.
All right, moving on then, SBI, Sneha, you have picked out for us. This counter has not really moved as much, as far as the banking names are concerned. Tell us, is this time that this counter started giving good gains?
See, I think overall, yes, it has been consolidating, but options activity has been quite interesting. We have seen some unwinding in out of the money call options like 810 and 814. All these strikes, we are seeing decent unwinding. So looking at that and overall consolidation, what we have seen, I think if someone wants to take a positional bet, they can go ahead and think about SBI at this level. One should keep a strict stop loss, which should be around 787, and upside potential target, especially if this counter heads towards 830, 840 zone. then there are chances that we can see a sharp momentum coming in, which can bring it towards the record highs or 900 plus levels even. So the risk reward ratio is quite good. So someone who wants to go ahead and take a fresh long can initiate this at current levels.
Fresh long is the call coming on SBI, but let's move on, Janelle. Let's talk about a big winner on D Street today, and that is Rallis India on the back of some stellar Q2 numbers that it reported yesterday post the market. Tell us what's got the street so excited and take us through what the earnings look like.
Well, yes, definitely Rallis India currently is gaining about 16% as we speak. And if you look at the numbers, the revenue grew about 19% on sequentially Q-on-Q basis, coming in at 928 crores. But what was highlight was the profit after tax. The PAT grew more than 2 times, coming in at 98 crores versus 48 crores sequentially. If you talk about EBITDA, it also grew from 96 crores to 166 crores, improving 73%. Whereas the margins also saw an very well expansion, coming at 18% versus 12% sequentially. Now the company had its con call. If you look at some of the key takeaways, we saw that the company has the company reported that it grew double digit, specifically 17% in the domestic market for both crop care as well as the seed business. They're targeting to grow higher than the industry rate is what they have said, and they're also aiming at increasing the market share in the seed business market to higher single digit from the current 4-digit market share.
All right, moving on then, we'll move on to Ambuja Cement that is in focus today. It is coming on the back of a block deal that has come in. Ambuja Cement in fact slipped 2% in early trading session, after 0.6% equity was exchanged in a block deal. Also around 1.5 crore shares worth 900 crore rupees changed hands at 586 rupees per share. Now this comes in at a minor discount of 0.7% to the previous session's closing price of 590.3 apiece. Now buyers and sellers of this transaction are not officially known as yet. We will update you on that, but as of now, on the back of this block deal, Ambuja Cement is in focus today. Right now it has it has inched up from the day's lowest point. It is trading nonetheless with cuts of 0.6%.
Okay, well, on that note, we'll slip into a very short break and talk about more stocks on the other side. But
there comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.